Hi, I'm Bruce Curry. I'm the finance manager here.
Nice to meet you, David.
David?
Yes.
It's okay if I call you David, not Mr. Curry?
Yes.
All right, my fault. I just want to make sure. So I'm going to be preparing all your legal and D&B documentation along with assisting you with the financing, okay?
Great.
It's not going to take too long, and while we're going over this paperwork, your salesman has your vehicle out back, okay? It's getting cleaned up, full tank of gas, and it should be ready to go for you when we're done.
I'm excited, man.
All right. So what I'd like to do next is I'd like to congratulate you on the purchase of the Accord. It's a beautiful car. You said Amanda had gotten in an accident a couple of years ago.
Yeah.
And it cost you a little bit of money, which is only money, and Amanda was okay. But there's something in place, and it's called guaranteed asset protection, also known as guaranteed auto protection.
Okay.
Have you ever heard of it?
No.
Okay. And the thing is it sounds like it wasn't even offered to you in your last vehicle.
No. I didn't even know anything about it.
It's something that's so important. So what it does is it covers deficiencies in loans and values of vehicles up to $50,000 on vehicles up to $100,000. So what I mean by that is, David, let's just say, God forbid, you were driving down the road and you hit a deer. Right? Things we can't control. Just runs out of nowhere. The car's totaled. You're okay, but the vehicle's not. All right. Now USAA offers you $17,000 because you know your wife drives double the amount of miles as the average driver. The vehicle's going to depreciate a little quicker.
Right.
Okay, so most times, and just about 98% of people are in this position, there's a deficiency. Okay.
Right.
What I mean by that is there's $3,000 left on your loan that you're responsible for.
Right.
And there's only a couple options here. You pay that out of pocket. You can roll it over into another loan if your credit allows it, or you can just not pay it. Now, you don't seem like the type of guy that likes either of those options.
No.
But you also have your deductible with USAA. What is that deductible?
$500.
$500. So, David, if something like this were to happen, not only are you responsible for this $3,000, you're also responsible for your deductible. So now you're looking at a $3,500 out of pocket, or rolling it into another loan.
Which is what happened the last time.
And it can get that's $100 more in payment right there alone.
Right.
You know, so something like this is a very effective tool, and it protects customers in the instance of something like this happens. You know, so I'm sure you could definitely, with being in that position, see the value in something like this.
Absolutely.
Okay, great.